What's up, guys? Mike Sharp here. This is just going to be a quick one. I just wanted to add some stuff to the QFIN video I did just a few days ago. Now, there's some things I missed, and I just want to point them out. So in addition to the 4 times price to earnings ratio on the stock, you also get a 20 to 30% dividend payout ratio, which has equated to about 4% if we're looking backwards. From the last the trailing 12 months, but I believe that this number is going to go up. I think that, so using their 20 to 30% payout ratio, if they make $4 in earnings this year, that would translate to 80 cents to $1.20, which is somewhere between 5.7% and 8.4% on my cost basis of $14.11. So it's a little bit lower now because the price is at 15 something. But still a pretty healthy dividend rate. On top of that, they got a $150 million buyback in place, and so that should be done within 12 months, and that would add another roughly 6% to the capital return we're getting now. So that means that there is 11.7 to 14.4% return of capital here to shareholders. So that's a very good rate to just sit and wait for any price movement we're looking for, or that I'm looking for. This is not investment advice. Don't do what I say. I'm just a YouTube guy. I guess the other things I wanted to mention were, government oversight and government risk regulation, all that kind of stuff, like the CCP bringing the hammer down. This is an obvious one. I thought it kind of went without saying that that's always a risk if you invest in China, but again, there's a huge amount of risk there. We don't know how bad the relationship with the US is going to get. Maybe it'll improve from here. Maybe Xi going to the US is him sort of being trying to calm the waters a little bit. That's possible. He had to eat some humble pie to do that, I think. So that maybe shows where he's at to some degree. I don't know. My take is that now that he's consolidated power, he can go back to sort of working on the economy. Maybe that's wrong. Maybe he's just a delusional tyrant, as all the media says. Okay, so there's that risk. And then if we look at regulatory risk, because of the industry they're in, that could be an issue as well. Now, previous to COVID, I think 2018 or something, maybe before that, 2017, they had a huge peer-to-peer lending explosion. It created this market where people could lend to these platforms and try and get a bigger return on the money, and the platform would lend out to other people. So that was P2P lending, and that totally blew up, and tons of people lost their life savings. And what happened is the CCP really brought the regulatory hammer down on sort of lending in general. They wiped out all these peer-to-peer lending companies and capped the rates that something like a company like QFIN can charge their customers, right? And so that rate has come down actually since then. So the regulatory bomb one of them has gone off already, right? So there was a lot of eyes looking at this industry, 4 or 5 years ago, and it was quite a long process. So it's not really the Wild West, the segment they're working in already. So I think a company like QFIN Kifu, I guess, is showing that they are a legit business, and they survived that huge crackdown by the government that wiped a lot of companies off the slate. So there's that. But then, it's the CCP. The more regulations can come down at any time. They could reduce the lending, the max interest rate that QFIN can charge, and that would definitely hurt their income and revenue if they did that. And there's not much that they can do about it. The last one is there's a couple of comments about audits. Now, that's always a risk in China. They say they have an auditor there, but they also say the PCAOB at the US, remember a few years ago there was all the delisting hype, has not been able to audit their auditor yet. So that may mean that they'd have to delist the company in the US. So that's a possibility that could happen. I'm not sure it's going to, I'm not sure it's a big deal, because now they're listed on the Hong Kong exchange as well as numbered 3660. So if in the event that there was a delisting, we could just transfer our shares over to Hong Kong. Now there might be a gap that opens up between the US shares and the Hong Kong listed shares because of the delisting. So there could be a loss there. But I think that the company's priced, basically it's priced for failure already. So I'm not sure that would have a huge impact. Like maybe it goes to 3 times earnings, in which case I'm happy to transfer to the Hong Kong shares. But yeah, again, this is not a long-term holding for me. I'm just looking for a price movement up, and I'll eat some nice dividends in the meantime. But keeping the position quite small because there is a fair amount of risk here, just on the on those things that I mentioned. All right, thanks very much, guys. We'll catch you in the next video.